Hey, what's up guys? It's Corey here with Dapper Dollars, and today we're going to talk about the American Airlines earnings beat and what that means for these small cap stocks that we're invested in the future. You ready? Let's get started. So this channel is all about using the online income opportunities like merch by Amazon and Etsy to build our income online and then invest this income in things like the stock market and real estate. If that sounds like something you're interested in, like and subscribe, and let's get started. So American Airlines posted a lot of beats in this last earnings call, and the earnings report that they have come out with already shows a pretty massive revenue beat. So this is an excellent opportunity for us to look into this and see exactly where American Airlines is right now, where they're going in the future, and what that means for the rest of these stocks in the future. Because remember, American Airlines is one of those indicators of travel, and if people are traveling, it means they're not home buying stuff on the internet. And if they're traveling, it means that they are investing more in services instead of products. So instead of people staying home buying stuff online from Amazon and things like that, they're choosing to go out and to actually be involved in the world. So things like travel, things like the tourism industries and the service industries that come along with tourism, like taking people on guides, and local economies are going to get a boost in their areas because more people are traveling. And so this is going to indicate whether or not there is a shift in the economy coming up and whether we can see a shift away from these larger cap stocks like Amazon, Apple, Google, Tesla, and things like that. So anyway, let's look into the numbers specifically and see where exactly American Airlines is and where they are going in the future and how that affects the rest of our companies. So American Airlines was expected, or they had a earnings per share of 3 cents in the positive compared to a negative $4.82 year over year. So last year at this time, they had a negative earnings per share of $4.82. This year they have a positive 3-cent earnings per share, and that is incredible for a $4 increase in your earnings per share year over year. Yes, there is a pretty substantial amount of credit due to the fact that a lot of travel was shut down, but this is an incredible opportunity to show that American Airlines is coming back strong and people are willing to pay to fly to go places. And so anyway, with that, there was also a multiple 100% increase in the revenue year over year, and it led to a $7.48 billion quarter for American Airlines within this year, or within this quarter. So this is amazing for American Airlines. It shows people are coming back, people are booking these trips and going places, and they added over 150 new routes to their service. So that means that there was a big hullabaloo about the fact that American Airlines had gotten rid of, I think, it sounded like a big number. It was over 100 flights that American Airlines had gotten rid of. In reality, that was like, I think 1% or less than 1% of American Airlines' total flights that they offer. But with them adding these routes back, it shows that American Airlines is taking these steps to reintroduce those flights that were taken out and get everything back to normal and increase the availability of flights that they offer across the world. So with all this happening, it is great information. And also, they're paying down debt. They're paying off $15 billion worth of debt over the next 4 years. So that is going to be incredible because the airline industries, just like the cruise industries with Carnival Cruise Line, took on massive amounts of debt just to stay afloat. They took advantage of the stimulus that the governments put out, and they did all of this to try to stay afloat so that whenever all of this passed from 2020, they would be in a position to succeed in 2021. So this is where American Airlines is headed. But remember, all of this is based off of Q2 of 2021. That means from March to July. That means we're looking backwards. There is definitely a different situation going on right now with the different strains that have come in across the world, and we're having to slightly readjust. But from what we can see from then looking even unto now, it is definitely an indication that people are wanting to get back out there. People are wanting to start traveling again. And from what we have seen with all of the vaccines, it is putting people in a much more advantageous position to maybe take some risk if they want to. Again, this is personal choice that people are involved in. However, it is definitely advised that people follow what they need to do to stay safe for themselves and to keep others safe around them. So anyway, with all of that said, it looks like American Airlines is in a fantastic position. They're showing that people want to get back out there, and from the earnings call, we definitely had a sense of positivity of American Airlines moving forward full steam ahead, hiring people, adding new flights, paying down debt, getting back to where they were in the future. And so what does all of this mean for our stocks in the stock account that we have? Because right now, American Airlines is moving up about, I think, 2.5% on this news. It's 12 p.m. on Monday right now, Central Time. So that's all the information that I have on where this stock is at right now. However, we saw a massive jump in the big tech sector. Big tech went up massively, and then small caps came down quickly right after that, whereas big tech hit a little bit of a skid and then continued to climb after that. So what does all of this mean? Well, with travel getting back to normal, it means that people aren't going to be in front of their computers buying stuff, just like we said. People are going to be on planes, on trips. They're not going to be ordering packages from Amazon, and they're not going to be ordering new computers or iPhones from Mac, and they're not going to be ordering computers or things from Windows or things like that. They're not going to be Googling, they're not going to be Facebooking, they're not going to be doing anything most things in front of a computer. They're going to be out in the world. This means that the big tech sector that has been going crazy recently is likely going to see a drop-off in the future and a possible rotation to service industries, because with the advent with people going into travel, it shows that people are getting away from products and more into services, just like we talked in our last video. I'll link to that here. And with all of that comes the fact that big money that has invested in big tech, which is serving people who are staying at home, the FANG stocks, Facebook, Amazon, Google, Netflix, all those people, they are going to be a little hurt by all this. Definitely going to take some wind out of their sails whenever those earnings come out later this week, because this week Amazon, Facebook, Google, Apple, all of those are going to be the Trillionaire Boys Club. Essentially, they're going to be presenting earnings, and they're going to be showing their Q2 results, and at the same time that the American Airlines stock is showing amazing growth there and people's ordering and getting on more flights, that is going to likely show that the other tech stocks are not going to do so well, because it's going to take away from what was an advantageous position for them. Because last year in 2020, all of these companies had amazing growth. There were people buying Macs for their house. There were people buying new iPhones so they could start YouTube channels or Instagram accounts. There were people who were buying new Teslas just because they were at home and they wanted to have something. And then there were the people who were at home, and Facebook makes most of their money from advertising. So if they're on their phones in front of their TV, they're going to likely be going towards Facebook or having Facebook ads pushed towards them. And so since Facebook makes their money from advertising, they were going to be majorly profitable in that situation. But with people getting out of their houses and going into the world to actually do stuff now, we're going to see likely that all of these companies are going to report a slight lackluster situation for their stocks and their earnings. But that means that money is going to have to go somewhere else in order to grow, because with these hedge funds that invest in Apple and all these other FANG stocks, they're going to have to find other places to put their money, and that is likely going to be in these smaller growth stocks, because people are going to be out and about and getting back to work. That means that these companies that are startups are able to get back to full swing and get back to their full potential and growth. And hopefully this is going to mean that the large money is going to at least flow a little bit out of these bigger tech stocks into these smaller caps, because like we talked about in an earlier video, it does not take near as much money to move these small caps as it does the large caps. Large caps with a $1 trillion market cap need at least millions of dollars to move their stock price 5 to 10%. But if you had just a fraction of that, what do you think it would do for a company like Aemeits or Vuzix or Hyliion that has a lower than $10 billion market cap? That is if you took just a fraction of that money that they were investing in Apple, they don't even have to pull all of their money out or even diverse their investing into Apple. They just put a little bit of money into these smaller caps. It is going to jump these smaller caps up huge. So we could likely see a run in the small cap sector soon, hopefully, and then we will see probably a resources boom or bust after that. So anyway, with all of this said, it is going to be a great opportunity to watch all of these things go down. The earnings calls, like I said, for these larger tech stocks are going to be later this week, so I definitely want to listen to those, report back to you, and see exactly what happens there. But I'm positive on this. I think this is going to be a great opportunity for these smaller cap stocks. I think they're going to be in a great position to move forward because the world is opening up and people are getting back to real life. So anyway, this is how American Airlines earnings report has affected and probably will affect the rest of this week. However, we just get to wait and see because it's the stock market and we never really know. But remember, all of this is strictly entertainment value only. There is no pressure or no influence for you to go and take action on any of this information. This is just my opinion. This is all entertainment. And if you have any questions about where do you actually put your money, consult a financial advisor. Do not make any decisions based on what you hear here, because I'm just a guy on YouTube. So if you have any questions or want to invest your money, make sure to consult a professional financial advisor first. So hope you guys are having a great day. Have a great rest of the week. And remember, someone is going to do something amazing every day, guys. Why not you? See ya.